A rate cut fueled housing boom. Let's have a look. Good morning, everyone. Florian here, and welcome to another episode of HeiseSays. Grab your stein of coffee, and we're going to check out this article from realestate.com.au, which is discussing, well, what early rate cuts would mean for housing. I don't think any of us would be surprised at all. It's not going to, well, I don't think we're going to see the calamitous crash in the property market that so many people are hoping for. There is insane demand for property ownership here in Australia. Why do you think so many people are fighting to get in? Why do you think housing affordability is a constant in the media? And not just now, not just recently, back in the day, guys. You can find articles of people complaining about property speculators and older generations buying property back in the 60s, the 70s, the 80s. It's part of Australian culture to whinge about property prices. So let's have a look at this one. Early rate cuts would see values boom from an SQM report written by Tim McIntry. So Australia's on the brink of a fresh property boom in 2025 as long as one thing happens early in the year, a new report has revealed. Could you imagine that if here in Brisbane, house prices have gone nuts. Everyone, let me bring up, do we have that? RBA rates. I don't have the SQM property prices on my dashboard. Let me bring this up. SQM, Brisbane, house prices. There we go, guys. Let's see, where can we find it? SQM research. What can we see? Property index. Let's look at Brisbane. This is there you go. Look at that. The weekly asking property prices here in Brisbane, everyone. For combined $1 million, 3-bedroom house, $977,000. Now, if we see this correction, well, no, down here. I remember when I was doing YouTube, we were discussing these prices and how expensive they were compared to income. Now, I was following the media and the lines that they were saying about comparing it to an individual's income, but we're not in that country anymore. That's off the chart. That's 30 years ago, 40 years ago. Think about it. People compare prices now to the 80s. That's 45 years ago nearly, guys. That's like comparing the 80s to the 40s. So you've got to just bear that in mind. We need to start realizing how fast time has moved, or how far it's moved, and how we're all bloody old. So, there you go. Here's Brisbane, guys. If we check out Melbourne, there you go. All houses, $1 million. It's much flatter than Brisbane. So I think a lot of the demand in Melbourne has moved to Brisbane. And then good old, the de facto capital, Sydney. There you have it. These are very high prices. They're very high prices. It just means that buying in the heart of the city is going to be harder, and you have to move to the periphery. You're going to have to find other things. You're going to have to earn more money. You're going to have to shack up. The two of you. SQM researchers released Christopher's Housing Boom and Bust report for 2025, which predicts property market movements for the year ahead, when factoring in a range of separate economic outcomes. In the most likely or base case scenario, we would see a 25 to 50 basis point rate cut midway through next year and a population growth of 500,000 plus. Property values would rise 1 to 4% as long as we have no new inflationary outbreak events. We're getting a really big population growth here in Australia when we're not at replacement birth rates for the majority of our citizens. You may all laugh and joke about how large my family is because we've got 7 children. But if we look at all of my in-laws that are not having kids, my brother-in-law, sister-in-law, they're not having kids, all the cousins that aren't having kids, we're just doing our part. Isn't that what Johnny said or Costello said? One for mum, one for dad, one for the country. So immigration has a large part to play in this. They should really tie it to property prices, housing affordability, but they'd never do that. They'd never do that because they don't want housing affordable. I'd make my argument so many people have a vested interest in property prices being higher. Once you're in the game, you want your house to be worth more. Because then that makes you a property genius, buying at the lucky time. Perth would lead the market with growth of 14 to 19%. Oh, what's Perth at now? Let's check out. This is the same website from the report. Oh, there you go. Look at Perth. Whoa! Whoa! What's going on here? Perth is at Brisbane levels now. Just about. Damn, guys, you're not the poor cousin anymore. We need to do those old live streams we used to do back in the day, where we'd look around and try and find starter houses. That'd be a bit of fun. Brisbane, 9 to 14%, and Adelaide, 8 to 13% would also be strong performers. This is us, the poor cousin cities, catching up to the big two, which is Melbourne and Sydney. And that always happens. Sydney and Melbourne will both see a downturn, with prices going backwards by as much as 5%. So there's your correction, guys, that you've been waiting for. This is the problem with property here in Australia. The demand is not decreasing, okay? People can say, oh, it's a bubble, it's about to burst. But Australia is a destination country for people all over the world. It's peaceful. We've got, relatively little corruption compared to other parts of the world. We bitch and moan about our taxes, but it's a stable, safe society. Let's just hope that doesn't change. Let's just hope we don't move away from being a high-trust society. It is a bloody nanny state, though. But all of this could change with a rate cut in the March quarter, as is still forecast by a number of economists. Yeah, economics is funny. I remember when I was studying some econ subjects at university, I thought it was hilarious that they were trying to pretend they were a hard science. When so much of it is just psychology, so much of it is just human behavior. We're not all rational. We're not all rational at all. Should the RBA pull the trigger in February, the research predicts growth of up to 10% at a national level. And in this scenario, every capital city would return to growth. Perth would still be at the top of the list, with 15 to 20% growth, followed by Brisbane, 11 to 15%, and Adelaide, 10 to 14%. This is the issue with this, guys. You have a house you've bought and you don't do anything to it, and you're getting 20% growth. And you think, okay, you bought $1 million house in Perth, you're up 20% in a year, 200 grand, doing nothing. Compared to working or running a business, earning 200 grand is a lot of work. And it doesn't go that far as it used to. But why bother? Why bother jumping through the hoops, dealing with all the bullshit when you just put it in property, guys? This is what the main issue with property prices going up so much and being so strong and so resilient and pretty much government-backed is that it disincentivizes investment in other parts of the economy. So the only ones investing in other parts are the megacorps. The rate cut would reverse the fortunes of Sydney and Melbourne, which have seen growth of up to 7 and 6%, which would see 7 and 6% growth. Report author and head of SQM, Lewis Christopher, said he expected rate cuts to come post the March quarter to be between 25 and 50 basis points, which would keep the price falls in Sydney and Melbourne to single digits. Our two largest capital cities, along with Canberra and Hobart, will start 2025 off in the red, he said. We're currently recording dwelling prices falls in each of these cities. However, once interest rate cuts do occur, we're expecting a speedy bounce in demand for Sydney and Melbourne in particular, where both are still experiencing underlying housing shortages relative to strong population growth rates. The potential for that quick recovery presented an opportunity for buyers to act now and gain equity in those markets, provided rates didn't come down in 2025, he said. If I'm wrong and rate cuts do not occur in 2025, it is unlikely that recovery will occur in Sydney and Melbourne at any time next year. In that scenario, in which rate cuts fail to occur in 2025, and population growth falls below 400,000 people, Mr. Christopher predicts values to go backwards by up to 4% nationally, with Sydney falling between 6 and 10% and Melbourne between 3 and 9%. Is that the correction people have been waiting for? If you've been sitting here since 2019 waiting to get in the market and you're seeing these corrections, Honestly, the hardest thing is to get into the housing market. That's the problem, because you're fighting the need for a deposit. You've got to save a deposit, and you've got to pay your rent if you're renting, and all these other expenses. Whereas when you get in your house, you don't have to pay for rent. You don't have to save for a deposit. You just pay off the mortgage. It's probably cheaper. In many ways, it's cheaper, guys. It's really shitty when they're saying, oh, you can't afford this, but I've been paying rent, which is more of it, or I've been saving for a deposit. Look. Perth would still record strong growth of between 7 and 11% as long as commodity prices remain stable. Ongoing strong population growth combined with strong employment growth and an existing undersupply of homes for sale will keep driving Perth dwelling prices up, the report stated. The key risks for Perth are a slump in iron ore prices from current levels. A fourth scenario, where rates remain on hold but population growth is 500,000 plus, would see a fairly static market with a growth range between 1% and 3%, with a growth range between 1% and a 3% fall. I think that that could be the best outcome for many people trying to get in the market, hoping for this. PropTrack economist Eleanor Craig said interest rates were an important driver of property value, but the supply of properties for sale, home building activity, labour market conditions, rates of immigration, state of the rental market, and interstate and regional migration were also factors at play here. No, it's not just interest rates, but interest rates gets the headline because so many of us own property, so many of us have got mortgages, and it frustrates people trying to get in. Over the months ahead, the pace of home price growth is expected to slow. Elevated interest rates and affordability constraints were weighing on buyers, while there are many more properties to choose from and more stock listed for sale, all contributing to the slowing in growth, she said. Still, prices are expected to remain on the rise in the months ahead, and once interest rates begin to move lower next year, rebooting buying activity with price growth likely to reaccelerate. Oh boy. If this is the bloody pause we're getting, I mean, look at Perth. Look at Perth. What's the capital city average? Let's look at that. There you go. There's the capital city average pulled up high by. I'm still shocked at Brisbane, guys. Maybe this is what old people feel like with property prices going up so high. Lower interest rates reduce the cost of borrowing, which lower mortgage repayments rates at the same time. Hang on, am I getting is my connection not working? Let me try that. Anyway, this increased affordability is like the fuel activity from potential buyers, bolster confidence among would-be buyers. Yes, they are just going to continue getting into the market. So let's have a chat about this one, everyone. What do you reckon, guys? What's your prediction for property prices? 20% outgrowth in Perth. Oh boy. There'd be some angry people, guys. Hey, it's all plausible. No predictions of that huge crash people are waiting for. What do you reckon? I'll see you next time.